In this lecture, we're going to discuss journaling for Edge. And I think this is something that, again, there's no right or wrong way to do this. But what I will say is if you're not doing this in some regard and you're just getting started, or even if you're an experienced trader, like you're going to lose. You're going to, even if you have Edge, you're going to lose it. You may never find your Edge. It's impossible to quantify which setups are good, which setups are bad, which conditions are good, which conditions are bad for your style of trading, unless you're recording and logging the data. Um, so just getting into it, journaling is absolutely alpha. You will fail unless you log your trades, collect your data, and reflect on the results, both good and bad. And I want to emphasize that it's super important to take both the good and the bad. I will frequently, a lot of times people will just dwell on what they got wrong and they're saying, if I had done this setup differently, like, I would have made so much money. But at the end of the day, that's important. But I think a lot of people overlook recording the good setups, and studying. Okay, this was a great trade. Why was this a great trade? And just reviewing that over and over and over again, and then trying to suss out what conditions were present for that great trade, and trying to repeat those conditions and repeat those types of trades when the conditions present themselves. It's impossible to find statistical edge unless you're journaling. Otherwise, you're just guessing. Journaling, reflecting, and data collection also helps you more easily spot regime shifts. For example, like a strategy was working well for a few weeks, but now isn't working. And I want to just pause and emphasize this is also another awesome use for journaling. A lot of times when we're trading, we get so in the weeds of like, you're in the zone, you're trading, especially lower time frame traders. You're in and out, you're going long, going short, whatnot. You're on a really hot streak and you don't remember what losing feels like for like a couple of weeks or even like months, and then all of a sudden you have a string of losses, one after another after another after another. You go on a losing streak, and your brain hasn't flipped a switch yet of like, oh, I was winning nonstop and now I'm losing, until you kind of look at the data and you're like, oh, like the things that I was doing and knocking it out of the park on, the last couple weeks, all of a sudden isn't working. Like, why is that? And a lot of the times, what I've realized is that it's simply just a different market environment. You're trying to do, for example, you're trying to take like scalp longs, or you're trying to trend trade long, but the trend has shifted. It's now flat or choppy or down, and you're still trying to go long because it was rewarding you the last couple months, and now it's not. And I think it's actually a great example for this market environment. Like, the last couple months were very fruitful, and now we're starting to get into some chop. And I think for me, what really brought it out to me was just simply just looking at the analytics of my trades. I was like, wow, I was on such a hot streak, and now like it's not as good. And why is that? Oh, things are different in the market. You can't expect to do the same things and be rewarded. So now it's like, maybe for me at least, it's like, well, maybe I should sit out, watch, observe, or take a short trade. So the goal with all of this is to eventually calculate expectancy per trade, aka how much you should expect to make per trade setup. So expectancy is simply kind of like a fancy word for what is your percentage win rate, times what is the dollar expected per trade, for each type of setup. And you have to categorize your setups, your conditions, and when to use these trade setups, whether it's a scalp long, scalp short, swing long, swing short, mean reversion long, mean reversion short, whatnot. So for example, it's like, okay, well, this setup is a 50% win rate. I know that if I use, 1 unit of risk, I'm expecting to get $100 of profit on this trade. So what is the expected value of taking this trade? It's $50. And that's kind of the point that we want to get to, where we have tagged our trades, our trade types. We know what conditions they work in, what conditions they don't work in. We know what our expected win rate can be. And then the kind of dollar win per trade is simply a function of how much we're willing to risk per trade. And basically, that should be defined ahead of time. You should have a preset idea of what percentage of your portfolio you're willing to risk, given different trade setups, in different market environments. And so it all eventually needs to be very quantifiable and somewhat regimented. So that's
That makes
this.
sense. Yeah,
Yeah.
it makes a lot of sense. And the only way you're going to get that is if you're very clear and concise about journaling and logging this data.
Absolutely. And yeah, it's impossible to, I think, win consistently without being systematized like this. If you're just like, I'll take a long, I'll take a short, I don't know, I felt, I'm feeling
No,
it.
oh yeah, for
Like,
sure.
I,
I could see it. I could definitely see that.
unless you're like truly like just trading ticks and you're kind of you're feeling in momentum on super low time frames and you're using massive amounts of leverage and you're more just like an intraday scalper where you don't have time to write it down ahead of time. That's probably the only nuance that I'll say is probably not exactly applicable to this, but I think at the same time, a lot of those guys that are doing intraday scalping, like I know Horse is a guy who does that. Like, first of all, he's done tons of journaling and he knows his expectancy, he knows his win rate percentage, he knows how much he's risking per trade. He doesn't have to think about that kind of thing. But for people that are kind of doing more so like range, level to level trading, swing trading, trading where they're holding things, multiple hours or like overnight or multiple days or multiple weeks, like you absolutely need to be calculating this kind of stuff, which I think is candidly most traders that are starting out. Um,
Yeah, and I would say I have not. I have. I mean, it's really something I've only now started to think about. Because before it did, I could see it where if you're not using some sort of a system or kind of being rational and calculated about how you're entering things, it really is sort of like the old, spray and pray type of situation. Oh, it looks like it's going to go up. Let's just throw money here.
yeah,
And I mean, I'll brutally honest. I've over the years I have done that before, and of course it's rarely worked out in my favor when I've done that. Um,
yeah. I mean, I think everyone
but
has
yeah,
who's traded before. I think it's how everyone starts out, and that's why most traders fail. It's something like 75% of traders will quit after the first year, and something like 85% of traders will quit after 3 years. Um, it's just because if you're playing against, there are many entities that are much bigger, much more sophisticated, much more patient. They're algorithmic. They're programmed. They don't lose. So like if you're gonna be the one who's disorganized and not, there's no system, there's no plan, like you're just giving them money, and you will lose and you'll run out of money and then you're done trading. And I think that's
in
why
fact,
the statistics are just so against people who don't take it seriously. It's not, if you want to gamble and have fun and get a dopamine rush, you should just bet on sports, bet on something else, play poker, like play blackjack. It's way more fun. It's not. This isn't trading. Isn't supposed to be fun. Honestly, it can be if you love
yeah,
it,
there's
but like
actually
it's not
quite a
supposed
lot
to
of
be.
emotion involved, and that's what I'm noticing. And in fact, even in the journaling yesterday, when I was thinking about it, like I'd mentioned the other day when I was talking to you about the almost like the market PTSD situation, I do. It's like I'm looking at it, I'm like, okay, well, in certain environments, it probably would be okay just to take a long at provided everything looks good on that time frame or whatever across time frames to take along and hold it for a few hours or whatever. But I have such PTSD from crypto over the years. It's like the only thing I feel safe doing is just like super short time frame scalps because I feel like if I sit in something longer than I can watch it, then I mean, I've been putting stop losses anyway. I mean, and I've been really good about that. But in general, I almost feels like if I blink, I'm going to get blown out. So I'm not holding this beyond, a quick 5% move or a quick 10% move or whatever you can get because it feels like I don't want to hold it longer than that because I'm afraid it's just going to not go in my favor. But again, that's something that I wasn't totally aware of until I started even thinking about the journaling thing and looking at where my emotions were at as I was trying to enter or exit or even look at whether or not there's something worth entering or exiting.
Well, I think it's a really good point that you bring up. I think through journaling and through reflecting, you figure out what style of trading um, makes sense for you. It sounds like you want to be in and out of trades. You don't want to hold overnight risk. You want to be more intraday, shorter time frame because it suits your personality. And I think everyone needs to dig
Yes.
deep and figure that out. I know a lot of people that are more passive. They don't want to be in and out. They don't have the time. They don't have the mental. They're not as good in those shorter time frames. And they're like, hey, I want to try to figure out when the trend is turning at the very, very beginning. I want to buy, and then I want to come back in like 8 months, and I want to sell, and I don't want to
And
touch it.
that's
I
a
don't want to
valid.
look at it. That's how I want to trade, and that's totally fine. That isn't necessarily my personality, but like you have to figure out what is your personality and what your risk tolerance is. Do you like it's so personal, I think, which is why I think when people are like, oh, there's only one way to trade, or if you don't trade like this, like you're gonna lose
No, it's
money.
actually very
It's total
deep.
bullshit. You have to do what suits your personality, and like it also, if you do things that suit your personality, you'll win more, if that makes sense. Like if you try
No,
to
I can
hold
make.
things for months or whatever, and you don't feel comfortable doing that, you're gonna mess it up in some way or another. Um,
That
so I
makes
think you're doing
sense.
the
Yeah,
right thing.
just sort of figuring out what works. Because I there was somebody that I'd seen years ago that he was really good at taking shorts and stuff, and then I started looking at it, and for a while, there's a plenty of exchanges that have the ability to do that, but now with and I would have to sort of figure out all the math on my own in that. But now with Hustle, and then you have certain things like Axiom, where I could sort of dip into it with very low positions, just to on very low leverage, just because I'm keeping my risk at this point as low as possible. It allows me to explore that as an option of maybe that would be something that I'm interested in, is taking more of a bearish view during bearish moments. Because for me, that's my natural. I mean, just like you said, it's not necessarily right or wrong, but my natural lens, I guess, is looking for the next dump. I'm always looking for a red candle, and that's just how I'm hardwired, I guess. And so for me,
There's a lot of people like that, and there's a lot of people that love shorting, and I had a good short the other day. I shorted Sui, and it was a great trade. I don't know if you're following along in some of the other channels, but we try to post some of our trade setups that we're taking, and some
I
of the
do. I
rationale
read
around
something
it.
about you in the Sui short the other day. Yeah, I think you did mention that.
Yeah,
But the last day or two was pretty decent for shorts.
definitely, definitely was. Well,
And
getting
so I found myself doing perps instead, rather than the trench coins, just because I don't know, I just kind of get burned out on trench coins sometimes.
Definitely, yeah, and obviously you can't short those. So when things go down, it just it kind of all dies, which is why there's kind of like seasons of playing the trenches, and then take a step back and exit everything and take and watch, and then people come back and there's a frenzy, and then that's kind of the market cycles of
Feast
those
or
smaller
famine.
coins. Um, Getting back to the presentation though, um, there's many different ways to journal, but there is no correct way to do it. I'll just list here what I do personally, and I'm not saying this is the right or wrong way to do it. And I'm sure some other people do it differently, and some people are like, "Oh, you're missing this," or they'll see something like, "Why the hell do you do that?" But I think this is just illustrative, and as you were saying earlier about like how you want to be very short term focused trading because that suits your personality. Like I have found that this kind of combination of recording my data and my thoughts works well for me, but this probably will not work well for everyone. And what I recommend is that people should not cookie cutter copy what I'm doing. And I don't think, as a rule of thumb, as a trader, you should copy and paste what anyone's doing in any methodology, like whether it's the journaling, the way they trade, um, the tools they use, whatever. Like you should learn what they're doing, try to understand it, and see if there's anything that suits your personality, and then take the good things and try to leave out the bad things. If you see some things where you're like, "Ooh, I wouldn't do that," like leave that out. And I think that's really served me well. What I've done over the years is I've really tried to learn from as many people as possible, and I'll always just take the best snippets. And if there's things where I'm like, "Oh, that's holding them back," I'll make a note of that, and I'll be like, "All right, well, I'm not going to do this," and it's served me pretty well. But basically, let's say this is, I think I put this in order, but at the beginning, like before each trade, I will gather data on the trade. Well, before all of this, candidly, I have a watch list that I put together either Saturday or Sunday or Monday before the beginning of each week of kind of like trades that I'm looking for. If the price gets to this level, if these conditions are met, I want to either go long or short at these regions because I think location is so important. So then when the trade actually looks like it's about to set up, I have a rule that I am not allowed to take the trade unless I record the data in Excel. And the data I record in Excel is like prerequisites like, is it obeying the proper like moving average? Is it obeying the proper level? Did I record this trade ahead of time? Because I really don't like taking trades spur of the moment unless it's kind of a more scalping strategy, which is I'm practicing, but I wouldn't say as part of my day to day trading. Like for my like intraday swing trades, like I have to write it down ahead of time. It has to be planned. I don't take things that aren't planned. Um, and I'll record a lot of data that I want to tag later beforehand. A lot of that data can be like, which moving averages is it obeying, like the 1 day, the 12 hour, the 4 hour, the 1 hour, the 15, 5 minute, whatever. Is it, what kind of trade setup is it? Is it a reclaim? Is it a continuation setup? Is it a swing fail? Is it, trapped longs, trapped shorts? I have all these tags that I like to post, and that's for my data visualization tool after the whole process is over, so that I can do that. Um, every week and every month, I do kind of like a data roundup of all of my trades in that week or all of my trades in that month. And I try to look at them in different ways. How am I winning long? How am I winning short? How much am I winning per trade? What are my stop losses? Did I need to have such wide stop losses? Did I need to have wider stop losses? I'll show some examples of all these things, but I'm just saying, like, this is kind of, I think it's essential to look at the data every week and every month just to make sure you're on the right track, just to make sure that you're not missing anything. Um, and then C, I do a lot of like written reflections with screenshots. And I know this is a very popular one, in trading circles, and it's a good one. I just create a Discord with just myself, and every single trade I take winners and losers. I just copy and paste a screenshot of the trade, and I write a few bullets. This is more like I would say it was very important at the beginning. I would say now, when I was trying to figure out what the hell I wanted to trade and which setups I wanted to take, I would say that C was like probably the most important because seeing pictures and being able to come back to pictures was really important. But I would say as you get more mature in your trading, the data collection and data tagging and data visualization is probably more important because you can really suss out some like cool alpha that way. And then finally, I've talked about it a bunch. I use a visualization tool called TradeStream. There's a bunch of them out there, but this is a great one because it connects directly with the exchange and pulls all the data on the trades, like when you got in, when you got out, was it market, was it limit, what were the fees, what was the funding paid, what time was it in, what session was it in. It's very very cool, but it's not really useful unless you tag the each trade with all the tags that you collect in A. So that's why you have to collect your data pre-trade. So there's obviously way more ways to do this than what I'm doing. Like there's some people that have like manuscripts of emotional state. They're recording what people are saying on Twitter. They're recording what I don't know, like what they ate for lunch, like did they wake up on time? Did they, what did they eat? Like they're getting really into it. I don't necessarily do that. I'm but there's probably even more that I'm missing here. But anyways, this is what I do. I'll dig into all of these things. This is just a screenshot of literally. I were talking about the Sui trade I just took. This is literally my I call it my pre-flight checklist. And it's just collecting relevant data. And a lot of times I'll make these and I won't even take the trade, but I always like having the data ahead of time. And again, this is what I do. I'm not saying if you copy and paste this you're going to be successful because this is literally 100% customized to what I want and what I need. And what you want and what you need is probably going to be different. But I have like some non-negotiables where I'm like, is the market structure correct? Are the moving averages that I want to trade here correct? Is price going in the right direction? Like just like basic things, like is it at least a 1.25R trade? Like just things where it's like if it's not, like I don't want to be taking this. And then this is my data section where I'm tagging this in TradeStream afterwards so that I can kind of suss out what is going on. I have the name of the setup. I have all these 1 day, 12 hour, 4 hour. These are moving averages. I just want to see like which moving average is it above, which moving average is it below. It's candidly, it's really actually been not that helpful tagging all these things, and I change around my tags all the time. what it has been helpful, and I see Max is in here. What I was telling him, what has been helpful is actually stochastics and daily breadth. And this is so, it's so ironic, but like, you know, Paul Tudor Jones, a lot of these famous traders, when you interview them and you're like, all right, how have you been so successful at trading? They're always like, well, I trade with the trend. And it's such a dumb, easy thing to say, but it's so true. And what I've realized is that even when I'm doing short time frame trades, when I am trading with the bigger trend, you know, Bitcoin's been moving up for 2 months. I've noticed that I just do better on the long side of things, even if I'm just scalping. Just trading with that bigger trend has been super alpha for me. I log some other things. What is the 3 day strength, ATR? Is the stop behind structure, that kind of thing. I dig into my psyche. Was it on my watch list? How am I feeling? Is there a better way to trade this? I think that's actually a really important question to ask. Is there a better setup you could take instead of taking it right here? What would be the perfect setup? Ask yourself that. And if you don't know what the perfect setup is, you need to, work more, take more trades, get more practice. Are you cutting corners? What could go wrong? Is it mid range? Is it choppy? Is it trending? Is it clear? How does Bitcoin look? How do alts look? How do you feel? Are you feeling impulsive? Can you sleep holding this trade? What's the risk you're going to use? I frequently, this is how I trade a lot of things right now, is I simply use 1R in each trade, but I do it over two different orders just to kind of make sure that I'm entering and not immediately getting blown out. It helps with drawdown. So that's kind of my pre-trade data collection. Um, every week and every month, I take all my trades and I do like a reflection on what I did well, what I did poorly. This is kind of a one that I made public facing. Obviously, the ones I'm looking at have dollars on them and they have a little bit more data on them. Like I'm looking at the types of setups too. But just for example here, what did I learn from all this? And I'll post a recording of this and people can look at this more. But um, I was taking too many trades. In this one, I took 14 trades in like 1 week, which is just way too many. And I also realized from this that I cut a bunch of trades way too early. And if I hadn't done that, I would have made a lot more money. So when you look at things like this, you can kind of see like recurring themes. And then you can things like this. I oversized. Like I wouldn't have lost so much money on my losing trades if I didn't get overconfident and I oversized too early into the trend. So super important. This is a weekly view. I do this on a monthly view. Um, Also, you can split things up like, oh, what did you do long? How did you do short? Oh, like you barely made any money short, but you made all your money long. Like maybe like you're in a regime where you shouldn't even look at shorts. Like you can suss out things like that. And then this is the one that I think a lot of people do is simply just go to Discord after you take the trade, copy a screenshot. How did it do? I just this is literally one that I just copied and pasted. Just how are you feeling? What did you learn? What did you see on this? And then what's cool about this is you can just scroll very quickly through dozens and dozens and dozens of trades and just see, oh, this is what was working for me. This is what wasn't working for me. Sometimes I'll even I haven't done this in a while, but when I was first starting out, what I would do is I would take all the commentary and I'd post it into ChatGPT and be like, all right, what do I need to work on? And I think at the end of the day, most people already know what they need to work on, but it kind of can help you suss out like all of your like, word vomit thoughts. Okay, so this is actually once you figure out how you want to trade, what setups you're looking for, you're kind of like past that initial phase of like, I'm just getting started. I think the data tagging and data visualization is so good. This is where the alpha is. So this is literally my April and May. So my win rate is only 39%. I took a ton of trades. I mostly went long, mostly went short, and I was profitable. This really isn't the alpha. I just wanted to kind of show what you 100% should have a pulse on this. This is the alpha right here. This is the data tagging. So again, remember what I was talking about with all my Excel that I write down all the tags pre-trade. This is what it looks like after you tag all the trades. And what you can see is like clear patterns. Like, all right, I should stay away from this shit, and I should stay with this shit. And it's really funny. This kind of made me realize, daily breadth, yes, which is just like, is the trend, are you trading with the trend? Yes, most of my winners are trading with the trend. And then most of my losers daily breadth no was trading against the trend. So it's just really interesting. It's very simple stuff like that. Like the moving averages, there was a lot of noise. Um, the types of trades, there was a lot of noise, but kind of like just trading with the trend was alpha. And again, like, look, this is for me. I'm not saying this is going to work for you with these tags and this kind of thing, but you should be thinking in this manner where you're tagging all your trades and you're sussing out what's working and what's not. I'm not saying that if you're going to trade with the trend, you're going to make money, and I'm not saying that if you trade against the trend, you're going to lose money. But at least I was. Other cool data. This is actually really cool. Um, this is when I open a trade and how much money I was making. So, you know, really early in the morning, I was getting chopped up, not really doing anything. But kind of after 1 p.m., this is, and this is also interesting. This is between 3 and 5 Eastern. And then afterwards, I was making money. But basically, these are the windows I want to be trading in. So I really shouldn't be touching the keyboard and clicking buttons until 1 p.m. And something's happening bad in between 3 and 5. And then, if I take trades after 5 p.m., they seem to be working out. And again, I'm not saying this is going to work for you. I'm not saying this is alpha, but I'm just saying the way that I trade, the things that I look at, this was alpha for me. So why the fuck would I wake up at 7 a.m. or 9:30 a.m. and try to trade the open if I'm not making any money doing that? Just things that I love with data tagging. And then finally, I do a journal every morning and night. It's not long. I probably spend between like 1 and 5 minutes journaling. Um, what was my emotional state? What did I learn? What can I do better? It's just unscripted. I think you should just get in the habit of just being in tune with yourself and data dumping. Not data dumping. You should just be dumping your emotions about trading and what you learned, and it makes it really helps declutter your mind and keep you focused on just kind of being present and ready for the next trade. I highly recommend this. Just in general, if you quit trading, I think that journaling at least once a day, twice a day is great, even better. But it just helps, I think, emotionally regulate you in a lot of different ways, which is obviously important in trading. And that's it. I'll open it up for any questions if people have questions.
I do have one question. When you were talking about trading against the trend, how far down the time frames does that normally extend? Because I know, like, you know what I'm saying? Like, because you might have like a pretty short bullish momentum,
Yeah.
between the 1 and the 4 hour or whatever, and you could trade those 5 and 15 minute time frames in that. But ultimately, if the long term, like high time frames are still super bullish, does that mean you should still exercise caution, I guess, just because
So
a,
again,
a larger trend is.
I showed that example just because that was applicable to me. I have no idea if that is going to work for you, and it's probably not going to work for most people. What that was for me was what it's basically what is the monthly trend. What is the asset doing over the last month? Is it going? Is it angling up or is it angling down? And if it was angling up over
Okay.
the last month, then usually the longs are more favored than the shorts. If it was angling down over the last month or so, then likely you're going to be, shorts are going to be more rewarded. But 100%. And look, I certainly had trades. Let's say, the trend was up the last couple months. I had some shorts that were winners. I'm not saying that it's like 100% hit rate or whatever. Um, but the takeaway isn't the whatever I found for myself. I'm just saying if you pay that level of attention to your own trades, you will find things like that will provide value in alpha and edge.
Thank you. That's fair.
I've got a lot of smart people in here. I feel honored.
Yes, I have a question. Was there a wake up moment when you started journaling that you said, "Oh, this now makes really a difference"? Was there anything that you found out about your trading style that was so significant it really changed your profit margin? Like,
I
I
think,
think
yeah.
many chicken out on this boring work, and but I for myself, I found out a lot of things like that I'm often arguing against the trend. Even if I had the data, I tried to counter trend and I stopped this because of journaling.
Yeah. I think there's like two aha moments. I think, at least for me in my journey, I think the first aha moment was like when I was just getting started out and I was trying to remove bad habits. I think keeping that Discord full of all your bad trades and why they were bad trades, and just like, I'm not even kidding, like when you're just getting started out and you're still like, I don't have an edge, you should just scroll through that every single morning. I'm not even kidding, every single morning, and just scroll through all your bad trades and look at them and be like, wow, this is why I am losing money. Like, don't do these things. Like, before you even have like any real success, you should just be like, all right, I know these are errors, like don't forget these errors. And then eventually it becomes kind of like, second nature. But I would say that was the first aha moment for me, was like, all right, just don't do this shit anymore. And the second was like when I started doing more data tagging, more data visualization, and it helps with regime shifts. As I said, like when you've only been taking longs for the last couple of months, and then it's not rewarded, and then you can see it in the data. You're like, oh shit, like I should quickly pivot and not keep wasting money trying to like long into resistance. I should either go flat or go short. Um, those are the two big shifts I think for me, and who knows, maybe there'll be more shifts, but I'll say that it's essential. It really is essential.
Thanks, man.
Yeah,
Yeah, it
good
is
question.
insightful.
Thanks.
Um, just for me, I think the biggest thing was um, also with the breath, right? When I started using the breath, and I said, I still, when I saw it's switching, it's turning, I tried to long this often like counter trend bounce, right? And it was always a loss. And I never realized how many losses I took because I never really tracked it. I never looked at the data. And when I looked at the first time at it, I was like, wow, 100% of these trades were losses.
Well, it's eye opening, right? And now that when that happens, not to do it, because if it's that much against you, just save yourself the money. Sure, it could work once, and that's what I think. I like, if you have enough trades, and I think you probably need like a data set of at least like 30 to 50 trades for one strategy, for a specific intentional strategy, to be able to make any conclusions about it. And even still, I think you should always be adding to it, because again, regime shifts, market condition shifts, where longs are rewarded and then shorts are rewarded. Like, you have to make sure, what is the strategy saying in both of those environments. um, but yeah, I think, and it's always hard, right? You want to go against the data. Like, you're like, oh, I know Bitcoin's gonna pump here. Like, we just sold off so hard. I know it's gonna rebound. I know it's gonna mean revert. But if your data is telling you otherwise, then I don't know. You have to come to terms with it. No one can make you do it. You have to want to do it yourself.
Yeah. What just came into my mind was another big thing I realized while journaling a few of my swing trades was it's not about the fine tuning in trading, and that's where most people start. They try to fine tune. Oh, maybe my stop loss was misplaced. I need to set it tighter or more loose and stuff like that. But the more important question is really, should you have taken this trade initially?
Yeah,
Like, should you even have opened this position?
yeah,
And they are stuck in fine tuning, even though they shouldn't have taken it at all.
yeah. What I'll say, and this is, I think, is actually probably alpha, that is more applicable to everyone, versus the breadth thing earlier. Like, I don't know if that's going to be alpha for everyone, but I think this actually will be alpha for everyone. Is you really shouldn't ever take trades that weren't planned ahead of time. Um, I've just noticed that if it is a planned trade, the win rate is like, it's truly like standard deviations higher than if it was an unplanned trade. Um, Sure. I know, again, a caveat, like, if your strategy is you're just intraday scalping and you're literally like opening and closing positions without even, like, you're going long, you're going short, you're just flipping and flipping and flipping. I know you can't plan for that, but you were planning to trade like that. Um, but if there's some type of setup where you're drawing it on a chart, or you can draw it on a chart ahead of time, it should be premeditated. It should never be just on a whim. Like you woke up, turned on the computer, oh my God, like Bitcoin's ripping off the open. I should just get in. Like, sure, I'm not saying you can't win. I'm just saying that you won't do as well as if you had just thought about it the night before, thought about it the weekend before the week started, and you draw out all the things that you're interested in doing that week. You'll do way better.
Yeah, I love it. It happens to me too. I think I'm just also comes with the confidence of that doing that and not be triggered. But what happens though is I wake up, and that happens often when I sleep in German times. I wake up and I miss the setup,
Yeah,
and I have to adjust my planned trade
yeah,
to higher entry or stuff like that. But that is manageable. For that, we have plan Bs or sit it out. It,
totally.
it is it's easier also to trade if your life does not depend on it. You can just miss it.
Oh, totally.
Um,
And missing it is way better than getting in late and getting screwed and losing money, right? Missing it, you don't lose any money.
oh yeah, oh yeah. Like not losing is the biggest change in my career.
Yeah.
Um,
I mean, look,
to be honest.
and me too. I'll we talking about what were their changes. I answered the what is the journaling change about it. The change in my like win rate and ability to be profitable was just not losing as much. I don't win more than I used to win. I just lose way less, and a lot of that is a not playing as much, and b when I know that I am wrong, and that's through experience and through collecting data. Like I'm out. I'm out. I don't give a fuck. I don't care if I was bullish and now I have to cut. Like whatever. And just doing it like more emotionally, emotionlessly, and not caring. That's what really turned the corner for me. I think when you are so desperate to win and it really impacts your mental and you can't cut and you're oh my god the loss I can't take another loss I've lost so many I can't lose another like that's why the journaling and that's why the reflecting and staying on top of your mental state is just so important in this because we're not robots and we people do go on tilt and I'll follow up what I said earlier where I lose is when I get careless and that's either it looks like two things one I have gone on such a long winning streak, I forgot what losing feels like, and I'll just take careless trades. Fuck it. I'll put a little more risk on this. Things are going so well. My invalidation will be really low, so I'll lose a lot if this trade loses. Or like fuck it, like I'll just take this trade. I just woke up, like that's when you give back ground. So just cutting out the carelessness and like the impulsivity, at least for me, is like something that I'm always working on. It's never accomplished.
Yeah, I love it, man. And also cutting out this bad behaviors is easier than change entirely. When you just cut out losers and concentrate on not doing your bad takes, not taking the emotion driven FOMO trades, life becomes easier because the real good trades are like 20%, especially or 10% if you begin. And only they stay. And there you can fine tune based on your data and find out why these were the winners. And just cut all losing behavior. And to find out what's losing behavior, track it. Right? That's the gist of that. Like you have to get your data together, visualize it, and see where do you win constantly and where do you lose constantly, and then just cut all the losers. There's no need to take these trades, especially if your life does not depend on trading or not yet. You don't need to take a trade, so just wait for your setup, for your planned trade, for your trade where I have 90% win rate on this stuff. It works out probably.
Definitely. Amen. I see we have Mav in here. Mav, do you have any words of wisdom for the crowd?
You guys don't want my words of wisdom on trading. I'm still in the process of learning, so you know, I loved everything you went through. Like, very valuable. I think journaling, to me, I think you guys see my journaling. It's all throughout Discord and Twitter. So like, I write down all the stuff that I'm doing, or whatever I'm touching, playing in. So like right now, I'm testing out like uh, astrology mixed with an AI agent. So I don't know. I like to try out different things with my trading style, see if it does anything. Just testing. But yeah, really cool, man. I love the presentation. Great job.
Thanks, man. I wonder if there's a way that you can journal with Agent Hustle. I'm sure there is.
Um, like I've been like keeping track of like the things it says, and I'll copy and paste it and put it into like my post or something. That's like how I've been doing it recently, so I can kind of see like what it said. If things went well or didn't go, I'll go back and kind of tweak it or something, and kind of retrain the agent a little bit. So I'm like documenting everything I do. Um, but yeah, it'll be interesting. Like today, it called. I tapped. So basically I connected the agent. That's like two AI systems I'm using to like an astrology AI, and I basically had them interact with each other, and they came to a conclusion that New York Open would have this false move, like based upon, and I'm not like an astrologer, so I don't know, but like based upon like some way the planets are positioned, it leads into false hope. So it's like, hey, it's gonna pump, it's gonna make people like kind of get in at the top, but like it's gonna dump later today. I don't know if that's actually gonna happen, but it'll be interesting. If it does happen, I'll be like, I might pay attention more to it, but we'll
Wow,
see.
that's so cool. Yeah, I was telling Uncle Jay earlier. I was like, with these AI agents like Agent Hustle, I think the alpha is record what it says and just record if it's right or wrong, and just figure out what it's right on, what it's wrong on, and then you can kind of like use that for some kind of signal. But very cool, very 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 cool. Well, guys, I really appreciate you all joining. I think I'm gonna wrap it up here. I hope you all learned something and have a great day, and I'll catch you guys on the next one.